Good Thursday afternoon to you. Welcome to the Jon Sanchez Show on Newstalk 780 KOH. Pleasure to be with you this Thursday. Little crazy, knocked out stock market Thursday. I don't know any other way to describe this thing. I can't use the words I really wanted to describe it. My goodness, what a time to be behind our microphone with you. But first, I'm not alone behind the microphone, joined by one of our two co-hosts. Mr. Millard has the afternoon off. Mr. Cory, Edge of Edge Realty, Big C. You and I were chatting prior to the show. It was a wild ride today. You watched it, from the outside in. I was on the inside out, and man, oh man, what a day it was! What a day it
Yeah.
was!
I mean, pretty fast. When you texted me this morning, you're like, "Hey, what do you want to talk about?" I'm like, "All the actions in your world, man. We got nothing over here."
Yeah, well,
However,
that's when things were going great.
yeah,
That's when we had nearly over a 700 point gain on the Dow Jones Industrial Average, and everything was just clicking right along, just like it should have been. And then all of a sudden, we hit a wall, and boy, what a wall that we hit!
well, and I'm sure we'll get into it, but we talk about real estate on Tuesdays and Thursdays. But we've mentioned on the show when the stock market goes down, people in real estate feel poor. They feel panicked. Like it
Absolutely.
reverberates through everything.
I'm curious. Do you hear that or see that with fellow realtors, or
I
is it
don't know
more
if
on the
I
consumer side?
a lot on the consumer side, probably some realtors, the commercial guys I know, they feel it.
Yes.
And again, it's how do you put it? You can't really pinpoint the panic other than how sometimes you'll wake up, I'm sure you do the same thing. You're like, man, everything's going good, something's gonna break,
Yep.
like
Yep.
something's gotta go.
Yep.
And so you get rolling in this business and yours, and it's like everything's going good, and that there's a worry spot. And this
You bet.
on these days, it's a big worry spot because you're like, oh great, well, how do you get ready for this? And people, you know way better than I do. You got a 401k, even if you're not going to touch the money for 20 years, you feel wealthy. So when it goes down, you feel less wealthy, and it causes a little bit of angst.
Yeah, boy, does it ever. We all base our feelings on how the market did. As cruel as that sounds, we shouldn't, but it's absolutely human nature. Well, folks, you are in for an absolute treat today because you're going to learn as to why this stock market sold off. Now, when it wasn't all that bad. If you just looked at the closing numbers, if you weren't sitting, in my seat and watching the swing today, you're gonna go, okay. Let's see, we lost 387 on the Dow, down 486 on the Nasdaq, 103 lost on the Nasdaq. Okay, or on the S&P. It's like, oh, okay, another volatile day. But what we experienced during the day, and what you're going to learn why we experienced the sell off that we did today, you're going to be shaking your head. I promise you, by the time this show's over, we're going to tell you why this market sold off like it did. And I promise that probably 99% of you don't know, not because don't know what you're talking about or not thinking or you don't stay in tune. It was the most bizarre thing that happened today. And it's not the first time that had happened. So this morning, as Cory was just talking about, he and I were chatting back and forth this morning. Okay, what do you want to talk about on the real estate side? And we decided, you know what, let's talk about leverage, how we can unlock the value, the equity in our real estate and leverage that into other things in a smart fashion. And again, we're talking about making sure that we can afford when we take money out and leverage it into another piece of real estate or into a business or something along those lines. So Cory and I put together this great show about unlocking real estate equity and again, teaching you about the leverage side of things. Well, again, that's when the market was doing great. I mean, things were phenomenal. Nasdaq was soaring, S&P was soaring, Dow was soaring, Russell 2000 was soaring. Everything was just going great. And then, Cory, I'm going to bring something to light that it's only my best guesstimate that this had any influence in the market correction today. But I'm going to go back to, it was 8:03 our time. The Dow just hit its peak, and I assume probably the Nasdaq was right there too. Just hit its peak about maybe 5 minutes before. And what had happened was it came across the news wires, and I did not hear CNBC talk about it. I didn't hear anybody bring it up. Now, I did have my TV muted, so I'm not going to sit here and promise you that CNBC didn't mention this. But I brought it up on my stock update with Ross this morning, and I said, Russ, this is really bizarre that we just peaked on this market about 5 minutes ago before we got this comment. And he said, okay, well, what is this comment? Well, the comment was, um, from I want to bring it up here. I didn't have it prepared. There we go. Okay, because I want to read it to you exactly. So this was again at 5:03, or excuse me, 8:03 our time. Cory, being in real estate, you remember the name, the Fed governor, Lisa Cook, right?
Mhm.
Lisa Cook, right? The one that Trump came after. It was in the news, big time in the news, where he went after her. It started with Mr. Polte, according to the head of the FHFA, with the direction of Trump, saying, "Go after this woman. She's a member of the Fed," which we know Trump doesn't like the Fed, and she was the one that they caught having more than one primary residence. She took out, at that time it was 2 mortgages. Now they're saying 3 mortgages, and she said they were all primary residents. So bad blood between all of them. She didn't resign. She is still a voting member of the FOMC, and to my knowledge, they're still fighting this thing out in court. Well, Cory, you watch the Fed as much as I do, and I don't recall any time, I was thinking back on this, that Lisa Cook has ever really come out and made any public commentary in regards to the path of interest rate increases, decreases, or really anything along those lines. Do you agree with me on that?
No, I've never heard her speak ever.
Okay. So was it absolutely ironic today that Lisa Cook comes out right when this market peaked and said the following? She's concerned about elevated asset valuations, private credit growth, and hedge fund treasury risks, but said overall systems remain resilient. Never, ever have I heard any comments from her, much less this shot across the bow. Now, let's break this down. And this isn't the reason the market sold off. This is just this is a small reason. We still have the 10,000 pound gorilla to share with you. So, elevated asset valuations. We've talked about this day in and day out on this program for months. This market is concerned about market valuations. Yesterday, of course, that's why NVIDIA, and why Jason and I spent the entire show yesterday talking about NVIDIA and the earnings that came out after the close, because NVIDIA kind of broke that trend. It's like, okay, we don't have to worry about valuations. Look at NVIDIA's earnings numbers. Look at Jensen Huang's forecast as to where the company's going, the backlog of sales, and everything was positive. And the stocks shot up over $10 yesterday. Well, by the way, NVIDIA today finishing down. This is a little after hours. $7 right now. It's down $7.51. So you're talking over a $15 swing from the highs in the after hours pre-market to where it is now. So NVIDIA releases their numbers yesterday. Everything's great. Futures shoot up. Futures looked phenomenal this morning. Opening bell rings at 6:30. Things are going right along. We're just chugging higher. I mean, just again, all the major averages, all the tech names, NVIDIA and Microsoft and Meta and all these names that have been beaten up because of valuation concerns, nobody seemed to care. It's like, okay, we don't need to worry about this because Jensen Huang, the CEO of NVIDIA, said things are good. He's not worried about valuations or an internet bubble or anything along those lines. So we're off to the races. Okay, so now back to Lisa Cook. So let's break this down. So she's concerned about elevated asset valuations. Again, a bubble forming. Private credit growth. Now, this is a show that we're going to have to do at a later time because there's a lot that we watch that most of you don't have privy to the information, but there's a lot going on in the world of private credit. Private credit, the reason it's getting the attention at this point is very simple. The Trump administration recently passed, and it's still, I don't think it's 100% complete. I think they're still working out some details, whereby you will soon, I think it'd probably be beginning of next year is my guess, you will soon be able to buy private credit in your 401k. Now, remember, private credit, Cory, has only been available to what we call the accredited investor, right? Accredited investor is defined under SEC regulations as someone that has at least $1 million liquid net worth exclusive of their home. If they're single, they make $200,000 a year. If they're married, they have to make $300,000. That is an accredited investor. But in my opinion, because of the pressure from the private credit industry under the Trump administration and his ties with them, he's told all the regulators, let this stuff come into the 401k market. Now, there is an argument. Matter of fact, CNBC covered it this morning. They did a great job on this story that with the right private credit mixture and adding to your stock bond, portfolio from a diversification standpoint, there is data to show that owning private credit can diminish your risk, what we call the beta of your portfolio, and enhance returns over the long term. That's again up for debate, right? But that's what they tell you. The downside of private credit, Cory, is lack of liquidity. Again, it was designed as a investment vehicle for the rich, a piece of their portfolio. They don't care that they can't get their money out in 3, 4, 5, 7 years sometimes. Does the average person care about that, Cory? That they can get their
Yes.
money out? You better
Yeah.
believe it. This is the tug of war that's going on. Wall Street wants all of you to start putting your 401k and other investments. They've lowered the minimums. They got rid of the accredited investors requirement, on and on and on, again, from the pressure of the private credit industry. And if you don't know what private credit is, let's give you a real layman's example. Cory owns Edge Realty, right? Cory's like, John, I want to expand. And, no longer just Aaron and I want to go hire 10 agents and I want to put my office in a big high rise and I need, I don't know, $10 million working capital to do it. If I was a private credit manager or private credit fund, I'd go to Cory would come to me. We'd do all of our due diligence. Cory looks like a great guy. He's got the financials, good credit, blah, 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 blah. Cory, here's your $10 million loan. So it's private, right? It's not Fortune 500 companies, but it's also not mom and pop operations. This can be companies literally up to 500 employees and more. But it's a sweet spot when it comes to the world of lending, because this is the size, Cory, that most banks do not want to mess with. They don't want the 10, 15, 20 million, even $50 million loan. But private credit, they love it. High interest rate. They cross collateralize you in more ways than you have any idea. They're very, very well positioned in the event, in our example, that Edge Realty defaults. They're going to be able to get their hands on a lot of assets and things. So with that example, that's what private credit's about. So Lisa Cook is concerned with that. She should be. Thank God she mentioned this, because no one else, besides my explanation, no one else is talking to you about this. All I can tell you is, please, unless you have an advisor that is helping you manage your 401k like we do with our clients, do not, if and when private credit becomes available in your 401k, do not get into it unless you are advised professionally, because there are so many nuances and so many risks that you have no idea that lurk unless you want to spend, good portion of a weekend reading the prospectus and really understand it. The third thing, the hedge fund treasury risk. This is the big one. Hedge funds, of course, can short, they can go long the treasury market, right? The safest markets out there. But they're hedge funds. They can do whatever they want. They can invest in anything, go long, go short, like I said. And if they're playing around, which is not making the news yet, Cory, if they're playing around in the treasury market, that could be a disaster for interest rates. And, again, I could do an entire show on the risk of playing around in the treasury market, or what hedge funds could do to the treasury market, meaning affecting interest rates and back to loans and so on and so forth. So those are three very serious issues that Lisa Cook brought to the attention: private credit risk, elevated asset allocation, valuations, and hedge fund treasury risk. That spooked the market. Like I said, it took the market about 3 or 4 minutes after she made that for the sell-off to begin. Now, when we come back from this break, you're going to find out the real reason. I'll say probably 98% of the reason why we sold off today. And I promise you probably have no idea that this is the reason, but you will here in a moment, only on the Jon Sanchez Show with Cory Edge. Let's turn it over to Kristen Snow, right now, Traffic Center. Hello, Kristen. Back to the Jon Sanchez Show on News Talk 780 KOH with Cory Edge of Edge Realty. Again, Dwight has the day off. All right, once again, it was a tough session across the board. I had tremendous strength in the morning, and then things began to roll over right around that 8 o'clock hours I'd mentioned earlier. But now it's time for you to learn the real reason that probably your own advisor is not even telling you, because most people are not aware of this, but you will be here in about 5 minutes. Once again, the damage didn't look all that bad at the close. 387 loss on the Dow, 0.84%. NASDAQ down 486, 2.16%. S&P 103-point loss. But it was where we were and where we ended up. 7-point loss, Cory, from the high of the Dow of the day to where we close. 1,109 points. Think about that for a second. And let me tell you, if you were sitting here in front of your computer and you went and you said, you know what, Dow's up 700 points, I'm going to go get a cup of coffee. You literally could have come back and you could have seen the Dow maybe 200 points, and then maybe step out for lunch. And that's when you would have seen it down, 400 or 500 points, depending upon where you were. It happened that fast. So Jason and I were strategizing all day long. And I, will always give you full disclosure. I wish we would have been the ones that we could have figured this out, but you have to have real true Wall Street insight, meaning you've got to be one of the major players for what I'm about to tell you. Well, thank goodness this gentleman was on CNBC today and highlighted what exactly happened. And again, we're going to talk real estate leverage later in the program. Now let's talk crypto leverage and how it impacted the stock market sell-off today. You're going to hear audio. It's about a 5-minute clip. So Jake, bear with me, or Jack, excuse me, bear with me. We're going to probably run a few minutes late before we go to break, but I want to get this out and then we'll come back and discuss it. This gentleman I'm talking about, many of you, if you watch CNBC, you see him on there all the time. And he came out today and he even blew away the CNBC host when he enlightened us as to what happened. His name is Tom Lee. He is the chief strategist for Fundstrat. Fundstrat is a kind of a boutique research firm, but he also got involved, and I'm not even going to try to describe what, in the world of crypto. He is now, I think he's one of the founders of one of these crypto companies, and I don't know exactly what they do, but the bottom line is, as you're going to hear in the interview, he actually is in contact day by day with these companies that are trading crypto. And what you're going to find, folks, actually what we're going to do, Jack, I'm going to retrace this. I don't want to be rushed. We'll play this audio when we come back. So let me set the stage for just a moment. What you're going to find out, folks, is there was a major unwind in the crypto world among the dealers of crypto. Not any one individual, but what we call the market makers of crypto. Now, what's a market maker? Just like we have in the stock market, the market maker is the one that decides what the price is going to be of the underlying asset. So in this case, the underlying asset is crypto. Well, these market makers also need capital. Well, as we all know, crypto was what, 123,000 just a few weeks ago. And for various reasons, crypto, Bitcoin, I'm talking specifically, right now it's at $87,136. Well, guess what? Many people that buy crypto, i.e. Bitcoin, they borrow money to buy Bitcoin. And so when the price starts to fall, many of these firms automatically liquidate their Bitcoin positions. It wasn't the client selling, it was the computer selling. Those are the rules that these firms have for some of these clients, a lot of these clients that have Bitcoin. And what's so bizarre, Cory, is last night I was reading a story about of all things, a MMA fighter who was crying the blues yesterday because he lost, I think the number was, like $500,000, lost every
Wow.
dime that he had in crypto. And he couldn't figure out why. And it was because the firm that he held the crypto with automatically sold. And one sell leads to the second, to the third, to the fourth. And you can't do anything about it as the owner of that account. It's all done by the computers automatically. Well, that tied in perfectly with what Tom Lee had to say today, how these market makers are in a world of hurt because their capital, their balance sheet for their business as a broker dealer in the world of crypto started to weaken with the price of this, and the selling began to accelerate, and one thing led to the other. And that selling pressure then impacted the stock market today. We'll give you all the details with Tom Lee's interview when we come back. Let's turn it over to Jack Saban, news, traffic, and weather. Jack, welcome back to the Jon Sanchez Show on News Talk 780 KOH with Cory, Edge of Edge Realty. Dwight Millard again has the afternoon off. Once again, we lost 386 on the Dow, down to 486 on the NASDAQ, and a 103 decline on the S&P 500. All right, now it's time for you to sit back and learn what the heck happened today. Because it wasn't all of a sudden people were concerned about AI valuations. It wasn't this or wasn't that. It was our dear friends over in the crypto market. And so without further ado, I want to play for you an interview. It's a little over a 5-minute interview with Tom Lee, Fundstrat, senior strategist, extremely well respected on Wall Street. But not only is he an equity guy, but he also is owner in one of the crypto companies. And Mr. Lee is going to explain to all of you what happened today, and then Cory and I will digest it. So sit back and become educated, folks. You're in for a treat. Here we go. Go ahead.
All right, joining us now is Fundstrat's head of research, CNBC contributor Tom Lee, also the chairman of Bitmine Immersion Technologies, an Ether Treasury company. All right, so Tom, you've heard what Steve had to say. This is, by the way, not unusual for NVIDIA, is it? NVIDIA, the good folks at Bespoke, your team, you've recognized that NVIDIA will often have these kind of wild swings following earnings, but what is your take right now on these markets?
Well, I think I'm going to kind of add to what Steve said. You know, I think the crypto market has been limping along since October 10th, because on that date was a negative shock. I mean, today's stock market looks a lot like an echo of what happened October 10th. But on October 10th, that liquidation was so big, Brian, it really crippled market makers. And our market makers are critical in crypto because they provide liquidity. I mean, they act almost as the central bank in crypto. And if they've got a hole in their balance sheet that they need to raise capital for, they need to reflexively reduce their balance sheet, reduce trading, and if prices fall, they've got to then do more selling. So I think that this drip that's been taking place for the last few weeks in crypto reflects this market maker crippling. And so in 2022, it took 8 weeks for that to really get flushed out. We're only 6 weeks into it. So I kind of concur. I think crypto, Bitcoin and Ethereum are in some ways a leading indicator for equities because of that unwind and now this sort of limping and weakened liquidity.
Well, that was the point that my very, very smart team behind me, we put together for the top of the show, which was showing that Bitcoin turned down today before the market did. All right, take us back. So October 6th, I think it was October 6th or 7th, Bitcoin hit 125,000. Yeah, a couple days later, it was still around 120,000. Now, obviously, Bitcoin's at 86 and change. So what specifically occurred on or around October 10th that would lead us to where we are now on what, November 20th?
Yeah. Well, Steve actually pointed this out. There's a lot of what they call automated processes in crypto. One of them is called ADL, okay, and that's an automatic liquidation feature that would take place if someone's account or their collateral drops in price. It's essentially like a margin call. On a specific exchange, a stablecoin's price varied from other exchanges. It actually, stablecoin should stay at $1. It dropped to 65 cents. But that only happened within the exchange quotes, within this exchange because of liquidity. That triggered an ADL, an automatic liquidation across many accounts. It wiped out, as that spread across other exchanges, right? Because liquidations cascade. Almost 2 million crypto accounts got wiped out, even though minutes before they were actually profitable accounts.
So who is behind this? Like, who's the they in the market makers and they got hit? Who's the they?
Well, Brian, I am aware of names, but because I'm not someone who wants to name names, I think what you should keep in mind is that this error is actually essentially a bug, a code error, because I think in retrospect, they would have pulled pricing from across exchanges to set the price for that stablecoin rather than rely on internal quotes. But this has resulted in a lot of market makers and traders having less capital. And as you know, as crypto prices drift lower because trading volumes drop, they need to then have more capital available, which means they shrink their balance sheet further. So this is then that reflexive weakening.
I want to go back to this point, Tom. I hate the term glitch. I can't stand the term glitch because, things go down at the airport and they say, well, a glitch caused your flight to not take off. That's not a glitch. That's more than a glitch. It's a word that is used to describe pretty serious automation issues, software problems, crashes, for some reason that they try to minimize. Is this some kind of a software bug that's causing part of this? I'm trying to follow exactly what you're hinting around about.
Yeah, Brian, it is. For instance, in 1987, portfolio insurance was the, quote, glitch, and that triggered the cascade in 1987. And so the industry learned and then never offered that again. In 2009, it was really the collateral wasn't secure in real estate in these packaged subprime mortgages. Now, the industry learned and they recoded that. I'm talking about Wall Street, but then regulators came in and overregulated. That was the negative effect of that. In crypto, this code of ADL and the way they pull prices is never going to happen again. The good news is we're not going to have overregulation in crypto, but now we have to deal with that liquidation effect. 2022 was a big liquidation, and it took 8 weeks. But that is not kind of, you're right. It is the nature of DeFi where there is going to be code and there's going to be an error found, and You said it. Leverage is what's dangerous. And so investors should not be using excess leverage in crypto.
All right. Let's break this down into plain English. What the heck he's talking about here. So first of all, and I did not know this, I'm going to give full credit to Cory. We were chatting during the break, and Cory was much more aware of leverage in crypto than I was. According to the research I did very briefly, and I don't have exact sources, it's not, well, actually I do, Margex, so on and so forth. You can leverage, depending upon which brokerage firm you're with, you can leverage your crypto 2 times to 100 times. So think about that for a second. You put in $100, they let you trade $200 or buy $200 of crypto. You put in $100, they allow you to buy $1,000 of crypto. That, folks, is leverage unlike anything I've ever seen. In the stock market, you hear us talk about margin loans. Well, that's 50% of your account value, roughly, that you can leverage. But you're not leveraging it. You're just borrowing against it. When we talk about leverage in the stock market, you get into things like derivatives, meaning options, put calls, different strategies. But very few things equate to the amount of leverage, Cory, that these crypto platforms allow these people to do. As you heard Tom Lee just mention a moment ago, within a matter of minutes today, 2 million crypto accounts were wiped out. Because if Cory's sitting there and let's say he put in $100 and he leveraged it 100%, and now he's got $1,000 of crypto, but he only put in $100, and the crypto starts to fall, and now these automatic sells kick in. Cory can't do anything about it. His $100 is gone, as Tom Lee just said, in a blink of an eye. So now, how does that relate to what happened in the stock market today? Okay, we're going to tell you about a company when we come back called MicroStrategy, one of the largest crypto platforms out there. And this is one of the companies, I think, that Tom Lee was saying, I'm not going to share names. But this company owns billions of dollars of crypto. Their stock has been under severe pressure these last few days. Today it lost 5.02%, $9.37 loss to 177.13. 52-week low on the stock, 171.48. The 52-week high on the stock, which happened almost a year ago. What do you know about that? November 21st of 2024. And at that point, the stock was at $543 a share. The rumor on the street is they got hit with this leverage that they allowed their clients to possess. They got hit. They went, our balance sheet is getting crushed. We're going to do the automatic liquidations. Forget about everybody out there, meaning the customer. They're wiped out, MicroStrategy. And again, I'm picking them out of probably many names that did this in the Bitcoin platform. They all liquidated. And now when we come back, now I'll share with you what they did that we think and why it impacted the stock market in a negative sense. Let's wrap it up with Kristen Snow right now, Traffic Center. Kristen, welcome back to the Jon Sanchez Show on News Talk KOH. Mr. Ed, your phone number. Very good. All right. Once again, folks, a wild ride today. Please go back and listen to the show on your favorite podcast company. We covered a lot today. This would be an ideal day, Cory, to do an entire podcast on this because we've only scratched the surface, I tell you. But anyways, all right. So you heard the interview with Tom Lee saying, look, at today's sell-off was attributed to the unwinding of Bitcoin. Once again, high, I was wrong, hitting the high not just a few weeks ago of 123. I said it's actually about 126. Right now it's trading at 86,567, down $2,623 or 2.94%. So now let me summarize once again what happened, according to Tom Lee and many others. All these people, of course, everybody you know is involved in crypto, right? It's the easiest thing in the world to make money, and people think. They go in, they put their money with one of these platforms, like a MicroStrategy or somebody similar to that. They let you leverage that up 2 times to 100 times. I guarantee people do not understand leverage. Otherwise, 2 million accounts wouldn't have been wiped out today. So now let's just once again use MicroStrategy as an example, because this goes, as you heard Tom Lee say, with other market makers. Again, a market maker, they're like the auctioneer, right? They're the intermediary between a buyer and a seller. So the minute they start to see this problem unwinding and these automatic sales happening, They're going, uh-oh, all these people that, oh, by the way, we're the ones that lent money to them. That's what they don't tell you, Cory. These brokerage firms, they are the ones that lent the money. So when MicroStrategy, or excuse me, when Bitcoin starts tumbling, it's not only affecting the account holder, but it's affecting the broker dealer, because their balance sheet is deteriorating faster than you can, shake a stick at. So now, before they start getting calls from regulators, because regulators are watching them going, your capital is getting very weak, you better do something about it. And hence, that's why they have this automatic selling, so they don't get caught. Otherwise, can you imagine if they lent all this money, 2 to 100 times what their clients have in their portfolios, and guess what? If they just let them fall and deteriorate to nothing, the broker dealer would not be in business very long.
Mm-hmm.
So that's why the automatic selling occurred. Now, how did this affect the stock market? So if I'm one of these broker dealers, what my strategy is going to be is this. I am going to short technology names, NVIDIA's, Microsoft's, Oracle's, you name it. I'm going to short those because I think they're going to go lower because of what's going on in crypto. So remember, you're shorting a stock you don't own. So you're shorting, I'll pick NVIDIA. You're shorting NVIDIA, hoping that it's going to go down. So now you're putting pressure on NVIDIA and all the other tech names, because all these Bitcoin broker dealers are shorting the technology names, hoping they're going to go down. That is their hedge against Bitcoin going down. So you had the first leg of the sell-off occurring with Bitcoin. The second leg is they start shorting the technology names. That's what drives the NASDAQ down. When the NASDAQ drops, we know what happens. S&P gets affected. The Dow gets affected. Obviously, the NASDAQ. That's this whole crazy web that we call Wall Street, folks. And that's why, again, I cannot express enough. Do not take margin on your account. And if you are a Bitcoin investor, look at your account tonight. Are you in one of these broker-dealer accounts where you've leveraged? If you are, please be careful and watch what you're doing. Cory, final comments?
Kind of like we were talking off air, it'll be interesting. This may have a few more days before it clears out, or it may be done tonight. You know what I mean? Like,
That's
it was
exactly
better
right.
than...
We can turn around at any time.
Yeah, it was better, like we talked about, it was better than the Fed coming out and saying we're raising rates 1%, because then
that's right.
You'd have no way to get out of it.
Two evils.
Yeah. This may just be a glitch.
We got to run. Yeah, let's hope. All righty, folks. If you have any questions, please reach out to us. God bless. Have a great afternoon. See you tomorrow on the Jon Sanchez Show.